Good evening, everybody. Welcome to tradingrich.com. My name is Richard Ajay, and I'm the co-founder and head trader here at Trading Rich. And I have a very insightful video here for you guys for the week here. So far, we've seen the market rally, and we've already recovered all the losses from from October 10th. We've recovered all the losses so far. So the question now is that, is the market going to head higher or is it going to head lower, right? Is it going to head higher or is it going to sell? So in this video, I'm going to explain where I think the market is going and how we can look to position ourselves strategically to benefit from any rally or any sell-off. Okay, so without much ado, I'll go ahead and share my screen here, and then we shall get into the charts. So we start with the SPY. That's the ETF that tracks the S&P 500 to figure out what's going on there. So far we've had, so this was the October 10th sell-off due to President Trump tweeting about trade deal issues with China and going ahead to impose 100% tariffs on China. But it has since been rescinded, and so far there's news that came out on Monday that President Trump has confirmed to meet President Xi in 2 weeks' time. So we shall see how that plays out, and that's going to be today. They confirmed that the location will be in South Korea. So yeah, so far we've seen that this was a sell, and we have almost recovered that sell. So from where it came from to where it is now, we've almost recovered everything. So I would say that we are more or less like break even, right? We are more or less like break even. So far, what I'm looking at is that we have this trend line here, this underbelly trend line. This is lower trend line from May. 1 hit, 2 hit, 3, 4, 5, and then here we got that 671, and then we pulled back and sold off, right? We got a sell, and then we came all the way to the 50 SMA on the daily. So far, the bulls have managed to recover and reclaim this underbelly trend line. So now we are looking to see where price goes from here. Okay, so far we have this. So this is going to be our resistance from today, and if price is able to push up and break up this resistance, we are going to make new all-time highs on the S&P 500 or the SPY. So we are going to see that happen. This could happen this week, and that will depend on Tesla's earnings tomorrow. So if Tesla's earnings tomorrow comes in good, then we are going to get that rally, and we are going to hit new all-time highs. And once we hit new all-time highs, price can head to this upper channel. So this trend line here is a longer dated trend line. This is from October 2023. 1 hit, that hit here, which is on this was in January 2025. If you extend it, it comes to the highs of this year, and then it touches it, right? So if price comes here, we are going to break out, and then we are going to hit another resistance. If the bulls are able to clear this upper resistance, which is the 2023 trend line, then we are going to push up and even go higher. So I believe that the S&P 500 will be by year end. My target for the S&P 500 is between 7,000 to 8,000, right? So between 7,000 to 8,000, right? Depending on how far we go from here, depending on if the US jobs market does not deteriorate and the economy does not get weak or go into a recession. If not, then I believe that once we crack this, the reason why we can get that big breakout is that when you break a multi-year trend line, this is what I call mother of all trend lines, right? Because this is a 2023 October trend line. So that means that it is a 2-year trend line, right? So this month is a 2-year anniversary of this trend line. Okay, so now I believe that if price is able to get here and break out of there, then we are going to go. So I think that will coincide with the mega cap earnings coming up next week. So if Apple, Amazon, and all those magnificent seven stocks deliver good earnings, Microsoft and Meta, then I believe that we are going to crack that all-time highs and then even go higher, and we are going to get a breakout today. But for now, we are still trading within this range, so it's going to be a trade between this underbelly trend line, this one for May, and then the mother of all trend line, the 2-year trend line. So until then, we are going to be trading with this in this range to see where price is going to take us. But that is going to hinge on the earnings. Earnings must be good, right? So earlier on today, we had Netflix. Netflix post earnings. The earnings was not good. The market did not like it, so it sold up. But it's not a significant sell. So even though it sold, it did not really move the market that much. But tomorrow's on is going to be significant because Tesla is like 3% of the S&P 500 in terms of the weighting. So if the earnings come and it's not good, it's going to get the market to sell. Okay, so let's see what happens here. So here, this is what I'm looking at. So we shall see how price. So my goal is to watch how price navigates between this all-time high, this 672.99, and then this mother of all trend line highs and the bottom of this underbelly trend line. So that's the interactions. I'm going to see how price works out. If it fails, we can put in a double top. Which is one top here, another top here, and then we can put in that double top and go down. If tomorrow's earnings is bad and then the market show weakness, then we are going to go down. Now that we've checked SPY, let's also check the VIX, because this is very important, right? I want to see where the VIX is. So the VIX is back to where it came from, right? So VIX is down here. Let me go here. So this is the VIX. So in other videos that I posted last week, I talked about VIX coming to 29-ish, $30 level. It came there. That was on Friday. And then we sold off. So it's back to where it came from, right? Like back to sender. It just came back here. So now VIX is at 17. Once VIX gets to 15, 16, is a place where complacency steps in, and we could also get a bounce again and push up to the upside. So for now, VIX is tamed. VIX is down here to 17. We shall see if this $17 level holds. If it holds and it starts reversing, then we expect pressure to be on SPY, and SPY will sell. Okay, all right. So the next one that I'm looking at is QQQ. That's the Nasdaq heavy, that's the tech heavy ETF QQQ. So if we look at QQQ, we have this Liberation Day lows to this area, to that area. So far price is getting close, very close to it. We are not there yet. So tomorrow, depending on what happens, we can get price to push up, and this area is going to act as resistance. This trend line here, this underbelly trend line, is going to act as resistance. And then from there, we are going to look to break out. So this is going to depend on Tesla earnings and the earnings coming up. So if Tesla earnings is good tomorrow, we can blast through here and reclaim this underbelly trend line as support, right? So right now it's going to act as resistance. And once he reclaims it, it's going to act as support. And that's going to be a launching pad for it to go higher, make new all-time highs, and crack through this. This just like a mini trend line from August 2025. So we are going to see if we can break above this and we can break out from there. So that is going to be dependent on the mega cap earnings. If the earnings are good, then we shall get that push to crack and then make new all-time highs. So there's a lot going to go on here. We can get into choppy situations where the market can be choppy and stuff like that. Also, if after the earnings on tomorrow, if Tesla does well and the CPI comes in lighter than expected on Friday, I believe it's going to come in lighter than expected, because usually when we have 5 days to Fed decisions, usually I find that the CPI numbers usually come in good, so that it forces the Fed to cut interest rate and stuff. So we shall see what happens this time around. So to 613 is going to be a critical area. 613 is going to be a critical area where we are going to see how the QQQ behaves, and this could be an area where we could put in just a double top and then go down as well. So this is a lot of work. This is going to require a catalyst or a big break for it to go. Else, we are going to consolidate for some time, wait for the mega cap earnings, and then from there we can push. But otherwise, this can come down, and then if we go down, this is the area where I'm looking to. So I will look to short this if we go down, and I'm going to target this gap fill. So this gap fill means unfinished business, and for the bulls, and they need to come back and finish the business at some point. Okay, so when you have these kind of gaps, they always lead to unfinished business, and we are going to come back down and then finish the business at some point. So we shall see what tomorrow brings and how the market behaves tomorrow. But my eyes is on this all-time high level, this trend lines, and then the gap fill. Whichever way they go, we can position ourselves strategically and then sell, like buy the put options here and then capitalize on this move to the downside. Okay. All right. So next ticker I have here is DIA. So DIA was really, it was the leading indicator for weakness, but it has come up, and I think today even DIA made new all-time highs. Actually, it made new all-time highs due to strong earnings from Coca-Cola and then strong earnings from 3M. Okay, so this here is, if you look at this, price came here. What happened to price? Like, that's the interesting part. What happened to price? Price came here, what? It put in what? It couldn't break above it, right? So this area here is a brick wall. So this is the trend lines that I had here. So this trend line here, this goes from Liberation Day low. The underbelly one goes from Liberation Day low to this one here, which is just a mini trend line. So they intersect here. And that area is where price came to. That general area is where price came to and rejected. So in order to break this double layer trend line, DIA needs to push in with a lot of force, right? It needs some more catalyst or a lot of force to push it up. And then once that happens, we are going to get the breakout and we are going to get to make another all-time high. So this here is an all-time high on the DIA, which held today, but I couldn't close there. We needed to push above it. If it fails, what's going to happen is that we are going to get that pullback, and that pullback, depending on how far it goes, we can come back down here and fill the gap. But right now, I don't think we are going to get that just pullback like that. Maybe we can pull back and get to this area 467, because anytime you are unable to break a brick wall of a trend line, the stocks typically retrace a bit, gather energy, and then the push up. It's just like you're standing very, very close to a wall and you're trying to break it. It's difficult to break it, right? You have to go back and then use force to push it, or use like a bulldozer to do it, right? So you need that distance. So that distance will be a pullback, hold this area, and then boom, they ram in and they push up and then we break out. Or we can get like a gap up, whereby we wake up and then one of the days we wake up on the morning day trading, we can get this gap up here, put in like a green candle up here, and then boom, it takes off. Then this all of a sudden becomes, this that was acting as resistance becomes support now once that happens. So we shall see how that is going to play out. But so far, it looks like a retracement is imminent here after this move, this failed move. So this is putting in what looks like a double top. So we shall see how that plays out in the days and weeks ahead here. Okay. All right. So next ticker that I'm going to be talking about is the SMH, right? And anybody that has been following the market closely will know that this stock market is the semiconductor market, right? The semiconductor stocks have been carrying this market, led by Nvidia on its broad shoulders, right? So as the saying goes on Wall Street, as the semis go, so does the market, right? So SMH is the semiconductor ETF. I was doing my analysis on it and I realized that I was able to discover this trend line here. This trend line is from 2020 highs. 2020 highs before the COVID crash. If you connect that to this here, this 2021 highs, and you extrapolate it, extend it, you are going to come here. This is the highs that we are in now. So over here, we are at what looks like a top. We shall see if price is able to break above this 5-year trend line. So this is what I call mother of all trend lines, right? If price is able to break above it, then we are going to continue going up. But I think that a pullback is imminent, right? We need a pullback. This is too extended. You need a pullback. So if you put the RSI, let me just put the RSI to check it out. See what's going on here. So you see that the RSI came all the way to 90, right? It's high, right? So we are getting that pullback. So this is rising up, and we are getting this pullback. We're getting this pull to the downside here. So we are getting this. We are getting this pull to the downside. So this is called bearish divergence, right? Bearish divergence. So this is pushing up, this is going down. So bearish divergence. So I believe that I will not be surprised if I see a red candle here that pushes this to at least, we can push this to. If you go to the daily, look at what the daily is showing is. It's showing us that a sell is imminent, that at least will bring us here, bring us to the 9. Then from there we come to the 20, and then from the 20 we can go down further, right? So that's the bearish divergence that I'm seeing here on the semiconductor ETF. So with that in mind, I'll be looking to, if tomorrow the market is weak, or in the days ahead the market is weak, I'll look to attack the semiconductor stocks that are very extended, right? Extended to the upside. One of them is MU. One of them is MU. So if you look at MU is MU is extended to the upside. MU is extended to the upside. If you look at this, so this trend line here I have on MU is a very long dated trend line. This is from 2017, right? 2017 highs here. To connect this, we are going to get to this place. This is where we are right now. So we've already seen that pullback coming. This is a red. So this week we are red so far on MU. If you go to this, we see that we have a top and tail candle here, and we are heading down. So my trade plan is going to be, I put my stop here, stop loss here. Stop loss is going to be if price comes in and closes above $215, like a daily candle closes about $215, then I'll be out of the trade, or I'll consider exiting the trade. However, if it doesn't, then we are going to look down and we are going to short this. So next target here, I believe this sell is going to continue. It's not done yet. We are going to get a pull to 196, and then there's a little gap here that needs to be filled at 192-ish, right? There's a gap there that needs to be filled. So that is going to be like a gap fill area. So depending on how the market trades, I will look to short this semiconductor stock and the SMH ETF, and I'm going to short it to the downside, putting my stop here at $215. Okay, so that's the trade plan that I'll be looking to watch out for tomorrow and the days ahead to see if I can get that move to the downside. Okay. All right. Another one is AMD. So AMD is also extended. If you look at the weekly, we go to the monthly. So here we have, I was able to find a trend line here. This is from 2006, right? 2006 highs. You connect it to 2024 highs. That brings you to where we are right now, right? And this is super extended, okay? We are super extended to the upside. And if you come to the daily, we see that price is, price looks like consolidating and stuff, but price looks like it's tired. It needs to come down. I will not be surprised if I see this go down. It could also go up as well. But I believe that a pullback is necessary, is imminent. and then they get that pullback. So here you have bearish divergence downside, and this is pushing up, right? So this could pop, I put in like a gap up tomorrow and pop, or it can head down. So if this is able to head down, so we are going to look for, there's this gap that has not been filled yet. So I don't think this gap is going to fill right now, but if AMD posts earnings next week, and the earnings on November 4th, I believe, if the earnings is not good, comes in not good, then we are going to get this to come down and fill this gap at some point. So my ultimate goal for any kind of retracement for AMD is to come back here and fill this gap. That'll be a big move to the downside, because this is going to be 240 to this. So I'm looking, I like the 240 puts. I put my stop here, and I'll see if this can work out and pull to the downside. And then if the semis are weak, AMD will be weak as well, and it's going to go down. Okay. Yeah. So these are the key things I'm watching for in the market in the days and weeks ahead here. And I hope this video was insightful and you learned something from it. Please put some comments put some comments on what you learned so far from this video, so that I will know that you guys are watching and learning something from it. And also, if you've not signed up, if you've not subscribed to the channel, please do. Please subscribe. Please hit the notification button, so that anytime I go live or I post a video, you are going to get it as well. So I post these videos every Tuesday and Thursdays, so you can get some insights and learn technical analysis, right? Because technical analysis is very, very important. It puts the probabilities 80% in our favor. So I want to use that to help you guys understand technicals, so that you can execute your trades with confidence. Okay. All right. So also like the video, and then we'll see you in the next video. Have a good night. Thanks for watching. Bye bye for now.